Okay, last but not least, video for the day. Let's look at the indexes. Maybe the NASDAQ is crashing. Maybe the stock market is crashing now. Let's go back to that. If I'm ever bullish, I'm only bullish for a short period of time, okay? And I wasn't really bullish. What I was saying is if the bulls are able to pass this resistance area and then hold it as a support, that would negate my theory of this being a bearish rising wedge. But as of now, look. Oops. Can I undo? I don't know if there's an undo button. Let's just throw this right back there. It passed it by a tiny amount yesterday. By a really tiny amount, but it was a fake out. Upper wicket profit taking. Ended the day just below the resistance line. And dropped today. And what was notable yesterday, fairly high volume yesterday. It's not often you see high volume at the highs. Take a look. High volume up here at the lows. High volume at the lows. High volume at the lows. High volume at the highs. I see that as a red flag. So I would be cautious here. You have high volume at these areas. Clearly people are getting FOMO with the market on this recent big increase, on the drop of crypto. People are looking to make back their money in stocks. People are like, you know what? I'm going to throw my money in Apple, Google, Amazon is much better and much safer than crypto. Little do they know they're all risky, but it is much safer than crypto. But it's all risky in the end. So, looks like we got some FOMO on the market, high volume, rejection of resistance, fake out above resistance, close below the resistance, very clear rising wedge type of pattern. And if you even go back over here, look at this big sell-off over here before it went up and made this rising wedge pattern. Look at Bitcoin. Big sell-off before it went up and made that rising wedge pattern. To me, these charts look really similar. Okay, they're not identical, but I mean, they've got a lot of very similar properties. I will say that. So, I don't like this chart. I don't like this potential rising wedge. I don't like the rejection of resistance. I don't like this high volume up here. I don't like the divergence on the RSI so far, where the RSI is the stock's hitting higher highs, but the RSI is getting weaker. I don't like the bearish MACD cross on the weekly that we had weeks ago, and we didn't get a bullish MACD cross yet. Okay, I don't like that even the monthly MACD cross is starting to curve a little bit. I don't like that we're overbought on the monthly. I didn't like all these red flags. Look at just a few months ago. Indecision candlestick, reversal candlestick, bearish hanging man candlestick, bearish hanging man candlestick. I mean, several months in a row. And Jim Cramer said himself, it takes about 6 months for the big guys to sell their stocks and get out of the market and go short. And guess what? 1, 2, 3, 4, 5, 6. The NASDAQ has gone pretty much nowhere. It is up slightly, okay, in the last 6 months. But this is the last 6 months. This is it. We didn't get very far. Look at SPY. Months in this sideways trend. And I've been saying this looks like a distribution pattern. And now it looks like we got a breakaway gap to the downside. We opened below the 50-day moving average on SPY. It acted as a resistance area today. We even closed below the lower Bollinger Band, below the red line. And I say stocks touch the red line almost every day. Why wasn't this gap down a buy? This looks like a breakaway gap down. And the reason why this gap down, see, gap downs are for buying, that's a saying. But reason why I think this gap down was not for buying is because it gapped down and broke below critical support area. Critical supports were broken. That's what a breakaway gap is, when the price gaps above or below critical support or resistance areas. In this case, it broke below critical support area, 50-day moving average. This gap down was not for buying. Not all gap downs are for buying. And it's not, the price isn't going to touch that red line every day. It does almost every day. Okay, red line, 4-day moving average. It does almost every day, but it's not going to every day. Look, almost every day it does, but some days it won't. And in this case, I wouldn't have been buying even though the red line was far away, because it appears to be a breakaway gap. And breakaway gaps are a negative sign. Breakaway gaps suggest that a new trend is beginning. Now, we've clearly been on a very nice uptrend. So we're getting a breakaway gap now below support. That signals that SPY, S&P 500, may be beginning a downtrend. And after this distribution pattern, I would say, and I've been talking about it, how it's like grinding higher, but it's not going anywhere. And it's gapping up every day, selling off, gap up, sell off, gap up, sell off, gap up, sell off, breaking new highs without follow through. All red flags I see, and I've been talking about them. So let's just say 10 bagger warned you about this. Now let's look. I didn't even notice this because I don't usually look at the Dow Jones. But look at that. What happened to the Dow Jones? That's a big sell-off. Wow. We don't even got a volume spike yet to suggest that that's the bottom. That's a big sell-off in the Dow Jones. I didn't even realize that. Wow. That's the blue chip index. Why is the NASDAQ not selling off? I'll tell you why. One, it had to complete this pattern. Okay? This pattern was not complete. It had to go and touch this upper line. The pattern has to complete. The pattern was not complete. That's why the NASDAQ wasn't selling off, but it might start to. And also, because this new Delta variant of COVID is threatening potential lockdowns again. And if people are scared of lockdowns, what kind of stocks are they going to buy? Tech stocks, e-commerce stocks, Amazon, Shopify, etc. That's why the NASDAQ's holding up better. But I'll tell you this, based on PE ratios and price to book ratios and stuff like that, many of the stocks in the NASDAQ are much more overvalued than stocks in the Dow Jones. So if we do get a big market correction coming up, the NASDAQ should dive. It should take a dive. So be careful. This is also a distribution pattern. This is a rising wedge. I don't like it. I don't like the higher volume up here. So that's my thoughts. I could be completely wrong. This isn't investment advice. Do your own due diligence. Do your own analysis. This is just my thoughts. And remember to like, comment, subscribe, share, and check out my course. And also, I didn't get to this, but look at the VIX. VIX is up nearly 17% today. Wow. That suggests fear in the markets. Also holding somewhat of a support area over here on the VIX. Okay, very clear downtrend line area, bouncing off of it. VIX, some fear is picking up in the markets. We had sell-offs across Japan. TSX dropped. Small caps. Wow, small caps was a big down day. Should have taken that into consideration. Double topped. Germany's down. Commodities are down, except oil. Oil's still very strong, which is very mind-boggling, really. When you think of oil is going up, when literally everything else almost is going up, going down. But then corn and lumber, green today. Look at lumber, though. It needed a green day. I mean, after this, you had this big spike because everyone's going to fix their homes and buy new homes. So the price of lumber is going up. Now you're getting this big drop because now there's a threat of a potential recession, whatever. People aren't even saying that. I'm saying that. If interest rates rise, pop. If interest rates rise, if they rise, they might have to rise because of inflation. I mean, if we're getting high inflation, interest rates might have to rise. There's no choice. So, government, the Fed, they're in a bit of a predicament here. raise interest rates and collapse everything, the house market, the bond market, everything collapses when interest rates go up. Or let our money become worthless. And that's also going to pretty much collapse everything too. There's pretty much no way around it. Sorry, I'm super supercalifragilistic bearish at the moment. By tomorrow, I'll be a completely different story. I'll be uber bullish. I'm going all in. But right now, I'm super bearish. But overall, I lean bearish most of the time. But right now, charts telling me, be cautious. This could be a long-term top in the NASDAQ. Watch out. That's all I'm going to talk about. Have a good weekend, guys. Thank you so much for watching. If you want to learn how to do this stuff and analyze yourself, check out my course. So much value in there. Probably the best stock course there is. And I'm OCD. And I'm making sure, I've been making sure that that is a top stock course. And it's worth every penny, I think. Thanks for watching. Have a nice night. Have a good weekend. Bye.